thank you so much for landing on my video. And if you stay until the end and you like what you heard, give me a thumbs up, share it. It helps me when you share it with someone that may need to know this information. But let's get into the subject. Today, I wanted to talk about talk to my homeowners out there. If you have purchased a home, if you are purchasing a home, you're thinking about it. I just wanted to give you some tips on your interest rate. One, I wanted to make sure that you understand what a fixed rate is versus an adjustable rate. And then I wanted to talk to you about balloon payment at the end of your note. When you first start out, you want to make sure you read your contract. Read your contract. Make sure that you know what you are signing your life away to, because 30 years to pay for a home is a long time. And if you don't start out early in the game, a lot of times we're not educated enough. We're not being educated that son, daughter, if you're going to buy a house, don't waste 15 years spending monthly money on an apartment. If you want a home, you got to go at it fiercely from the get-go. Now it's easier to buy a home than it ever have been. It's easier than it ever has been. Home ownership is one of the, it's an American dream. That's one of the main things that are on your list. When I grow up, I want my own home. Now, I'm not putting down your renters, because stepping stones, a lot of us, I had an apartment when I first started out. I loved my cute little bitty apartment. My mom helped me decorate. It was so cute. That was my first apartment. That was my home. Whether it was an apartment or a house, it was still mine as long as I paid the rent. But as I got older, and then I met my husband who had been buying his home, I learned that home ownership is so important. With apartments, you're not really actually on your own. You're in a building, but you're under that one roof with a lot of other people. You got to worry about, if they start a fire next door, is it going to affect me in my apartment? A lot of times it will. And I pray that never happens, but it happens. If that person has rodents, insects, roaches, rats, a lot of times they progress. They go from apartment to apartment. If everybody isn't clean and there isn't a system where they bring in the pest control guy, in apartments, it's the worst trying to get rid of critters, you can be clean and you'll still see them, because you're in an apartment. You're with other people. You don't know how clean they are. They don't know how clean you are. If you spray, all the critters do is run to the next apartment, kind of hide out. Hey, man, we're going to hang here for a minute. Let that scent die down. They let it die down. And then after a while, you're like, gosh, I got rid of these things. Now they're back. I know I'm clean. Yeah, you're clean. But is the guy downstairs clean? Is the lady upstairs clean? Is the neighbor next door clean? You don't know. But in apartments, that's something that you're plagued with, is other people's stuff, other people's insects, other people's music, other people's disrespect, other people having no regard for you. Now, there are some apartments that are nice, but those apartments probably cost big bucks, big bucks, where they got their stuff under control. They got the pest guy coming in. The yards is kept up. They don't tolerate loud boom, boom, boom music. They don't do that. Isn't it annoying when somebody come through your apartment complex and they playing the music like that's their own personal property? They have no regards for you. So first of all, your fixed rate. When you're buying a home, say for instance your note is $850 a month. Fixed rate means that is your rate. That is what you should pay for the remainder of your 30 years. Or if you're paying for a home and they give you 15 years, that's what you pay, including, though, your interest. So a fixed rate is a rate that you get, you agree upon it. Say it's going to be $850. then you're going to pay $850 plus your principal. That's your principal, but you're going to pay interest, and you're going to pay it for the duration of your 30 years or your 20 plus years or your 15 years, and most are 15 to 30 years. Going to fixed rate, you shouldn't look around 4 or 5 years down the line and that 850 has changed into 950. It shouldn't. Fixed rate means just that. It's fixed. That's your rate. That's it. Now, the next rate is adjustable rate. This is where you got to be careful. You got to watch out for that adjustable rate, because what they can do, it fluctuates with the economy. If the economy is up, your rate on your home could go up. You could go from 850 to 925. You could go 850 to 1,000. You don't know. But it'll fluctuate because you agreed in your contract on an adjustable rate. Don't ever agree on an adjustable rate. Even if the interest goes down, and it's seldom that your note will go down, but there are some instances where your note should go down. I hadn't heard of many. I haven't. I'm sure it's out there, but I haven't. Not in this terrible economy where gas is ridiculous right about now. Gas is just skyrocketing, and even back in '08 when gas went up, it caused a lot of people to lose their homes, and a lot of people that their rates went up, they did not know they had signed up for an adjustable rate. They had no idea. I met quite a few people. I said, why are you in trouble with your home note? Why did you lose your house? And a lot of them said the note went up and there wasn't nothing I can do about it. Some people note went up from $1,000 to $1,200. That's ridiculous. But their notes went up, and so now that extra money they had for lights, water, gas, or groceries, all of that, they had to take that extra and get on this note because their homes were going up. So you found people being 3 and 4 notes behind on their house note. And when you're that far behind on a house note, where your lender is traditional, where you have a bank that bought your house or a mortgage company, when you get that far behind, they call that they will foreclose on that home, meaning they're coming in preparing to take you out of this home, to put you out, basically. They call it foreclosure, but it's basically putting you out, taking the home back because you got behind and you can't seem to catch up. Yeah, that's why a lot of people file bankruptcy. They get behind, they don't know no other out, and so they go and get under the protection of bankruptcy, where your home can't get taken, and you're still paying the note, but you're paying a smaller amount. And a lot of times your creditor is upset by this bankruptcy because they're not getting what they wanted to get out of you, but it saves your house. So people lose their homes a lot, not realizing that adjustable rate was in the contract. So be careful. Be careful about that adjustable rate. Now, some of you may have heard about balloon payment. A balloon payment is, say you've gone 15 years and you've been paying your note with no problem. You paid the interest. A lot of times you're going to pay interest years before it even touches the principal. And that's what you get with traditional lending. But balloon payment is you can go smoothly paying the notes, smoothly paying the principal, and then they come those last few years and they say, you know what, we want all of this, the rest of this balance, we want it at once. So they call that a balloon payment, and they want you to pay all of that. And what can you do? You signed a contract, you didn't read it, and you didn't know that was in there. So be really careful when you're going into these homes, when you're buying. Make sure that you understand. A lot of times we have document after document and we just signing our name, just signing, and we don't read. You got to read, because you got a lot of predatory lenders out there. You got a lot of legal sharks out there, and it's designed for you to actually fail. I mean, you got some people, they went through it. They went through 30 years of paying and the years of going without and struggling, making that house note, and they paid it off. Some went in extra debt trying to get it paid off. They went into their 401k trying to get it paid off, but they did it, and you can do it too. But now I will tell you this, continue to follow me, because I buy real estate. My husband and I, we buy real estate, but we don't do it traditionally. No, we don't. We buy houses and we fix them up and we flip them. And you can buy our houses lease to purchase. We don't check your credit with predatory lenders and with the traditional lenders. They check your credit. You could be the best person in the world. You could be a good person. You could have all intentions of paying this house off. But if you don't have the credit that they feel you should have, then they don't want you buying their house. And you could be sitting in front of them with $20,000 down, but they are saying your credit, you're not trustworthy. When they check your credit, they're trying to see if you're trustworthy enough. Yeah, are you making enough? Are you not bound down by so much debt that you're going to get in trouble paying our house off? They're trying to make sure you can pay this house off. Because it's not that they want to keep the house, but they want to make sure that when you get in it, they ain't got to turn around in a couple of years down the line and take it back from you. Either way, they win. You lose, they win. So with the way we do our houses is we do ask for a down payment. We don't ask for $8,000, $9,000, $10,000 like they do. They do ask for some big chunk. They asking for the money because, of course, they're selling you a house $150,000 plus $200,000. You can barely get a house now under $250,000. You can get some, but it's barely. We get houses, we take them, we fix them up ourselves. Then we look for trustworthy people. We wish everybody was trustworthy, but everybody that sit and say, hey, I'm going to pay this house off, things happen. And so we ask for a down payment. You pay your down payment. We get the note where you're comfortable. And then with our houses, you're done in less than 10 years. We don't have time to drag it out 30 years. I mean, that's a long time. You want us to drag it out, we will. But you own your home with us in less than 10 years. 7 is the most. 7 to 10 years is yours, outright, free and clear. You get your deed, and that's your house. All we ask is you pay it on time and you pay it monthly like you do any house note. You get insurance on it, but you have to pay your house taxes. With any home, if you're going to become a homeowner, you got to pay property taxes. That's just a must. You're no longer renting. No, you don't have to pay property taxes because when you rent, you're renting a home per month. You're paying your utilities, you're paying your rent, and your landlord handles that. But when you say, hey, I want to buy this home, then they expect for you to pay those taxes. They only come out once a year, yearly taxes. They come out once a year, and you pay your taxes once a year. Simple as that. You can own your home, but you got to be determined. You got to be willing to sacrifice and save. But you can own your own home. I'm not putting down renters now. Don't think I am. I started with renters. I'm not putting down people that rent. I rent my business properties. So I'm not putting you down. I've rented before. I'm not putting renters down. But when you own your own home, you own that property. You own that peace of mind, knowing that nobody can just trespass on your property because that's your property. You get to fix it up the way you want to, remodel it the way you want to, because it's your home. This is your home. Maybe a starter home. A starter home is a great way to get out there and test the waters and get under that responsibility, that umbrella of owning your own home. Ownership is more power than you think. Thank you guys for sticking to the end of the video. If I said anything that helped you or could help anyone else, I want you to like and share this video. And if you haven't already, subscribe to my channel. I talk about all things good here: business, finances, opportunities, motivation. I just talk about whatever comes to mind. So if I said anything that helped you, I'm glad I did. And thank you for stopping by. Till next time.